think more long term and kind of really think about what you want your kind of ideal life to look like. It's kind of like what we talked about before with, enjoying what you're doing. You never want to retire. And I think like just really finding like what my passion is.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Greg Rosa here on the show. Greg, welcome.
Thanks for having me, Neil.
I appreciate you being here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Yeah. So, Greg Rosa, I'm here local in Des Moines and actually moved here 5 years ago. So I'm not a native. I grew up in Oregon on the West Coast and kind of moved all over. So recently I moved here from Arizona is the most recent place where I live. But I'm just a local investor here in Iowa, mostly in the Des Moines metro and primarily in flipping houses.
You grew up in Oregon. Did you go to school out there? Or what point did you move from Oregon?
I did not. So I actually went to school in Ohio at a small private school, Franciscan University. And then after college, just kind of with work, I just ended up kind of moving all over the country. And then, like I said, I moved here about 5 years ago from Arizona, which is kind of where all my family ended up relocating from Oregon. But then, I met my wife, who's a West Des Moines native. And so that's kind of how I ended up out in Iowa.
Yeah. What were you doing before you came to Iowa?
So I was working in the mortgage industry. So since college, I worked in real estate. I worked for a real estate investment company that specialized in multifamily. And then I went from that. I ended up getting into the mortgage industry kind of when interest rates were really low and everything was real hot. I got to work in that for a while, which was a lot of fun. And then, I was working that right before I moved to Iowa. And then I also did that for a while after I moved here.
Okay.
Yeah.
So when did you meet your now wife?
That would be like 2019.
2019. All right. So you were in Arizona at the time.
Yes. We met online, actually. Yeah. On Catholic Match.
That's amazing. Well, What a great story.
Yeah.
You guys met, did the internet thing, did the remote dating thing. And then at some point you're like, all right, this is serious and I'm going to pack.
Yeah. I never thought I would end up moving to Iowa, but things just work out.
It was probably just a non-thought, right?
Yeah, exactly.
Yeah. So you get to Iowa. What do you do then?
I'm still in the mortgage industry working as a loan officer, originating mortgages. Like I said, it was during that refi boom that we had. And I did that for a while and it was a lot of fun. And then once interest rates started like doubling, it wasn't quite as much fun anymore.
That I believe.
And that was kind of right around the time me and my wife got married. And I was just kind of looking at what I was doing. I always wanted to start my own business. And I was like, I think that would be a time. And that's kind of how I, transitioned into flipping houses.
Buying houses. What year here did you buy your first house?
That would be 2022. So it was just over 3 years ago.
All right. So tell me about that experience. You buy your first house. You're like, I'm gonna go flip this thing.
Yeah.
What was that like?
So I actually previously owned a house in Arizona. It was my primary residence and I kind of did a house hack. I had roommates that rented out the rooms from me and it was great. And then I moved and I was like, well, you know what? I'm going to keep this house for a little bit, rent it out, still have family down there to kind of help with the management and stuff like that. And it's always been kind of an interest of mine. So I was like, maybe this would be a good way to kind of cut my teeth and doing some real estate investment. So, basically I did that. I did that for 2 years remotely. And then I was coming up on that 2-year capital gains rule. So I talked to my accountant about it or whatever. And I was like, you know what? Home values kind of went crazy during COVID in Arizona. I was like, I think this would be a good time to sell. So I sold that. And then I was like, I kind of have this cash that I wasn't expecting before. And so that was kind of how I was like, I thought flipping was kind of the move at the time in 2022. It was, a seller's market and everything. And I kind of, honestly, a lot of what I learned about flipping was just from podcasts and stuff like that. So I was going in, I had some construction background and stuff, so that wasn't like totally blind, but kind of figuring out the numbers and stuff. The first one was definitely not the best. It was a break even, if anything, and so kind of learned a lot by doing the hard way.
Let me go back. The capital gain tax you referred to. Correct me if I'm wrong. I think it's must be your primary residence for 2 out of the last 5 years.
Yes, I believe so.
Memory served me correctly, but ultimately it's so that it's qualified as your primary residence, where then you get a tax benefit by selling a primary residence versus it as an investment property.
Right.
Okay. What did you learn on the first one as it relates to contractors? You're in a new city. You haven't used the guys before or the gals before. What was that like?
Yeah. So, I mean, a good contractor, I mean, it's kind of can make or break you, obviously, but I think on the first couple projects, I mean, it's really like, I would say first off, like not always taking the lowest bid, like if possible, working off of a referral.
Sure.
So like, luckily, my wife's also in real estate. And so she did refer me over some contractors, and those are probably the best ones. And I was
kind
of, yeah. And I've since branched out and but yeah, I mean, just like getting someone with referrals and someone who's, kind of detail oriented. I mean, it's like they call like when I worked in construction was like the construction triangle, which is like you're usually going to get 2 out of the 3 things on the triangle, which is like cost, time, like quality of work.
2.
Yeah, exactly. Yeah, just learning that and kind of figuring out like where it can work in. It's like sometimes things aren't so time sensitive. So maybe you get someone who's more affordable and kind of do high quality work. Yeah.
From that first one to today, are there any contractors that you still have retained to do things?
I do. Yeah.
Amazing.
Yeah. Just one.
Yeah.
But yeah.
But it seems like and I'd love your take on it, but it seems like when it comes to flipping a house, you got to buy it right. You got to manage that rehab rate.
Mm-hmm.
And then kind of the end, you got to sell it right. But if you do those first 2 and you align with the correct realtor, that last domino actually falls pretty easily.
Yeah. And I think more than anything, it's just buying it right.
Yeah.
It's like the other stuff. I mean, you can rehab houses beautiful and whatever and try to save costs on it or whatever. But if you don't buy it right, it's like you can only make up so much cost on it.
You're right. You can't save your way into profit through the rehab.
Yeah.
You've got to do it on the front end.
Well, and out of all the flips I've done, I've maybe come under budget once.
Yeah, that's you're right about that. That almost never happens, does it?
Yeah.
Hey, Iowa investors. This is Ava Bautkamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
Tell me about, the deal, the flip that was most successful. I don't need any numbers or anything, but I'm curious about what was unique about that particular one, and then contrast that with one that was the least successful.
Yeah. So actually the most profitable flip that I ever had, I had 2 that were kind of, I guess, in line with each other, but the one was actually, it was a super easy flip. It was like, there wasn't a ton of work to be done to it, but I just kind of had a seller who was, very motivated, and they wanted someone who could like move really quick. And it was kind of one of those things. It's like, I kind of say it's like, the more at bats you get, like you eventually just get like lucky and you're going to like hit a home run. And so it's like, just like a super rare instance, but it's also like something to do with if it's like a simple flip and it's like, hey, I'm just going to do like carpet and paint. You can like really like nail that rehab budget.
Sure.
Whereas if it's like, oh, you're planning to do like $100,000 rehab, it's like 100,000 could turn into, like 20% over. It's really going to hurt you.
Yeah.
And so I think, just those ones that are like really simple, like kind of cookie cutter, like you have a house and it's like, this is a nice house. It's newer construction. It's just kind of been a little bit run down. And on the opposite side of that, I mean, the worst house I've had has been one of these like really old houses, and you got like foundation issues, and you think you can kind of budget everything for it. But at the end of the day, it's like some of these like really old houses, you can really uncover a lot of things when you're going through the rehab.
Yeah, that was my direct experience. Same thing when you get into a 100-year-old house. For example, you just, you open up a wall, literally or figuratively. And it's just like, wow, there's just,
Yeah.
those old ones just tend to give.
Oh, yeah.
Yeah. All right. So dealing with contractors, we talked a little about that. Talk to me a little more about buying right. When you're going through these numbers, especially, I'm curious about today's environment. Are you looking at comparable sales differently today than you were, say, even 6 months ago or a year ago?
Yeah. Definitely needing to tighten things down. Like when I first got started in like 2022, 2023, it was like we would budget for something and you run the ARV, and then when you go to sell it, you're selling it for like 10% or more than what the original ARV was. I mean, it was crazy. Like things were going over list price, first day on the market, like whatever. We're obviously not seeing that anymore. Trying to be a little bit more conservative on those ARVs. And then also, I mean, just like when I'm pulling comps, I'm not going back a full year anymore. It's like I'm trying to get like as close as I can on comparables, and then also like, as recent as possible on those comps as well. So
are you noticing any downward trajectory of price?
I mean, we're doing a lot of price reductions right now.
All right. So talking about the comps, you're gone, obviously, like, you'd like the home to have sold yesterday, all the comps, right?
Yeah.
But where I'm going with this is I'm wondering if you feel a downward trajectory in price, therefore you're using comps and then you're still discounting to those comps, thinking that when you deliver a product to market in 3 to 6 months from now, that the market will actually be lower than what your comparable indicates.
Yeah. I mean, one thing I always try to do is always try to move as quickly as possible. Mm-hmm. And so I try to get it closed as quick as possible for the seller. And then same thing on the rehab. We try to get as many like hands on the project as we can so we can get it on the market to kind of try to eliminate some of that risk of like the market changing. Doesn't always work out that way, but sure. That's kind of the goal. But yeah, I mean, I wouldn't say like when I'm running the numbers, I'm like looking at the comps and I'm being like, oh yeah, like, it's, ARV is 200,000 now. So like when I go to sell this in 3 or 4 months or whatever, it's probably going to be like 190 or whatever. I wouldn't say I'm necessarily doing that, but I am definitely like building in a little bit more of a margin that I'm looking to make versus, a year or two ago, it's like we're being a little bit more aggressive on the buy side.
Yeah, because the margins were holding tight and true. And if anything, they were running much higher.
Yeah.
Because the market was rewarding you for that holding period. On average, how long from the day you close until the day it goes back for sale?
It really just depends. I mean, the quickest we'll do it is like, a couple weeks. So I would say 2 to 6 weeks, probably. 6 weeks, yeah.
You really got that process dialed in.
Yeah, I think so. And I mean, part of that is just like having, good relationships with contractors. And it's like, I try to use the same guys on every project. So they're like, make me a priority, if possible.
Yeah. Now, you bought a franchise.
I did.
What year was that? And then tell everybody what franchise is it? Because they'll certainly recognize it.
Yeah. So originally, when I started flipping houses, 2022, I was kind of doing my own thing, generating my own leads and everything like that. And then, let's see, this would have been February 2024. So it's been like a year and a half. Yeah. I decided to buy a franchise, which is HomeVestors. Like you said, pretty well-known franchise. Yeah. And that was just kind of part of my plan to, I guess, kind of scale things up a little bit. And
yeah, we buy ugly houses. Everybody knows that tagline.
Yeah.
What benefit have you derived by being a franchisee in that system?
Sorry, what was that?
Yeah, what's the benefit? What have you been the biggest thing that you have now received as a result of what you pre-franchise?
Yeah, I mean, there's a lot of benefits to it. Obviously, pros and cons to going both routes, franchise or not. But I kind of look at it as like, I mean, I knew if I wanted to kind of expand my business and start scaling more, I was going to have to do some sort of marketing efforts. And I would say like marketing is not at all a strong suit for me. Yeah. And so it's kind of like, I mean, when you're looking to do anything in business, and you're like looking to expand, it's like, well, what are like my strengths and weaknesses? And I'm like, this is definitely like a weakness of mine. So it's kind of nice. That alone for me was like enough to get into the franchise, just not have to worry about that marketing and stuff. I mean, there's just a lot of like resources. It's like there's other franchisees and it's like, instead of them being like competition, it's nice to have other investors like in your market or like surrounding markets. Like I talk to people in Cedar Rapids and Omaha that are also with the franchise. And so it is kind of like, it's nice to have a team behind you with that. And yeah, so I mean, those are kind of the two main things with it.
Are you keeping any rentals?
I am. Yeah. I have a few rentals. I don't know. I try not to fall into like this shiny object syndrome or whatever, but there is like a little bit of a balance. It's like primarily I'm a flipper, but every once in a while I'll see something. I'll be like, you know what, this would be nice to hold on to long term. Then I start looking into like these other things like, you know, commercial or real estate and whatever. And I'm like, oh, that looks interesting too. But just trying to stay focused and kind of, you know, master what we're doing right now before looking at something else.
What hits a buy box for you to keep as a rental versus flip?
So definitely location is like the biggest thing. And like people love, you know, like having a garage at the house. They love having a basement. I mean, I don't know, 3 or 4 bedroom houses. Like if I could get something that's a ranch, that'd be perfect. And then, yeah, just whatever part of town it is, if I think it's going to rent and, you know, if it's going to be a desirable area. I don't do like, I mean, I'm not going to be buying in like high end areas or whatever, but, you know, kind of that happy medium, I would say.
Yeah, it sounds like you're looking for something in a quality area that catches both some level of appreciation and cash flow.
Yeah, exactly.
Without too much brain damage from the tenancy standpoint. Given the quality location, you're going to attract a higher quality tenant.
Yeah, exactly. And hopefully not have a ton of turnover.
Yes. What's the goal for you on the rental side?
Yeah, so it's funny you say that. I actually recently been going through this because it's kind of like when you're first getting started, it's like, oh, I just want to like acquire some and kind of see how it goes. And yeah, it's one of those things like so I have a goal, like in a lot of ways, this would be like my retirement. And so I want to look at, for breaking this down, it's like I have an income goal that I want to hit in retirement. And it's like, okay, so like how many rentals do I need to hit my income goal? How much, you know, revenue will that generate? And then I kind of place like a conservative estimate. It's like if I'm bringing in, you know, $1,000 in rent on a house, like conservatively, like half of that's going to go to expenses, which is probably overly conservative, but it's like, okay, so if I have one house that's giving me $1,000 a month rent, probably it's going to be like a net, you know, $500 a month in income, earn profit, I guess I should say. But yeah, so that's kind of what I'm looking at, and I'm trying to back it out and see exactly, you know, where I want to be for retirement. So it's something I'm actively working on, but I think that's will be my goal, is to kind of have like a paid off portfolio when I go to retire. Yeah.
And when's that? You got to be like 30 years old now.
Yeah.
You're a young man. So I like the foresight you give talk to. Where do I want to be? But what time horizon is that in?
Yeah. So I mean, honestly, I'm only 34, so like things can change, obviously. For me, I don't know if I ever really want to like fully retire. My father-in-law, he's 70 years old. He's in real estate and he still hasn't retired. He's a very part-time, I would say. But I think if you have something you enjoy, like what's the point of retiring? And I don't know if I want to go, you know, just sit on the beach all day or something like that. Or, I mean, it sounds nice, but want to stay active and keep doing something. And I think rather than like not working it at all, it's like, well, how can I make my work something that I, you know, really enjoy and that I never want to retire from?
It's amazing because so many business owners that I talk to say the exact same thing. And so many employee people that I talk to say the exact opposite.
Yeah, exactly. And when I was working like, you know, a corporate job, like, you know, 30 years ago, I would have been like, I want to retire when I'm 40 or, you know, whatever.
Can't happen fast enough.
Yeah.
No, I completely understand that. Yeah. There's something about the controlling one's own destiny and then coming into this, and it goes past the dollar. Clearly you fall in love with the work.
Yeah, exactly.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
What gets you most excited about what you do?
I think for me, like, there's a couple things. Like, I mean, I'm definitely like a competitive person. And so I think if I like can really see the results of what I put into something, it's like, I mean, it's very fulfilling for me. Like, I mean, I don't know. It's like, everything I do, there's a direct result of it. So it's like the harder I work in my job, the more strategic I am with my business, you see more fruits come from that. And so I love that aspect. And I also love that it's like every day is different.
Yeah.
Like I was telling one of my friends this other day when they asked about, me kind of going after my own. It's like, I don't know. I had a hard time working a job where it was like every single day was exactly the same. You have to get these tasks done or whatever. And it's like sometimes, this business is very chaotic, but in some ways I kind of thrive off of that because it's just, I mean, it's exciting. There's always something different. Like, even though every house, it's like, oh, you're, flipping a house. It's like every house is different. Like, market's different, which sometimes can be stressful, but it's just like navigating it and like using problem solving skills and everything like that. I find it like very exciting.
Yeah.
Yeah.
How many days a week do you work? I'm wondering what your balance is.
Yeah. So I do work 6 days a week. So I grew up on a farm. And so on the farm, it was like, you work minimum 7 days. My dad worked 7 days a week growing up always. And so for me, it's just always been like Saturdays, like for working. And honestly, it's my favorite day to work because that's the one day like my contractors and everything aren't calling me. And so
I'm laughing because I often put a number of hours in on Saturday.
Yeah.
I agree with exactly what you just said. It's my favorite day because nobody's calling or emailing.
Yeah. And so the stuff that I don't really want to do, like, admin type stuff or whatever, it's a great day to get that done where you can kind of plug in and sit in front of your computer and like no one's going to call you or whatever unless it's an emergency. But yeah, so, and I would say like on Saturdays it's like not usually a full day.
Do you have siblings?
I do. Yeah, I have 2 older sisters.
You're the youngest.
Yeah.
How did growing up the youngest, how did that impact you in such a way that it has transcended into what you do or how you do what you do today?
Yeah, so it's interesting. Even though I'm the youngest in the family, I'm the only boy, and I grew up on a farm. And so it's kind of like there was a lot of responsibility from, I would say, kind of a younger age, and the family kind of counted on me a little bit and stuff like that. And so I don't know that I necessarily have all the personality traits of like a youngest child.
What's the age span between everybody?
So let me see. So it's like my parents had 3 kids in 3 years, basically.
Oh, okay.
So we're all pretty close.
You're pretty close.
Yeah.
So all of the youngest is not like there's a wide gap there.
Yeah, exactly.
Looking forward to next year. What are you most excited about?
Next year. It's a great question. Probably. I mean, we're getting close to the end of the year almost, so I should be thinking about that. Yeah, I think just kind of like getting in the groove of things. For me, it was, last year transitioning to this franchise and we kind of scaled up a lot. It was really different, like meeting with homeowners and like going, directly out to people's houses and getting to know them and stuff. And so I think I'm looking forward to just kind of like having a lot of those systems down and stuff like that and kind of like understanding how marketing is paying off and whatnot. And so, yeah. And obviously I'm always looking forward to like a spring market as well. So,
yeah, exactly.
So that'll be exciting. Yeah. And I think, I don't know. Yeah.
How many, just for a frame of reference, how many homes you bought last year, roughly?
So this 2025 year to date, we're at like exactly 20. Yeah.
It'll keep you moving.
Yeah.
What are you seeing right now in the marketplace? Are things slowing? Are they picking up? How are showings? What do things look like right now?
Yeah. So it's funny because, we met like a couple weeks ago to have coffee and I was kind of saying like how slow things were and everything. And then like I just got 3 houses under contract since we last met. So it's like right when you think you have things figured out, then it's like you don't, and then things kind of like shift or whatever. Yeah, I do think it's interesting. It's like it obviously feels like more of a buyer's market, but we're getting like on all of our houses that we have listed, it's like we're getting a ton of showings. Not so many offers. It's taking longer to get offers, and it's definitely softened up. But I don't know. It's hard to say. I haven't been doing this nearly as long as you have, but it's like, I'm like, is this what normal feels like? Because we got so used to just like this crazy, seller's market. Yeah. And then it's like, well, things have kind of cooled off, but is this normal, I guess?
Yeah. We're coming off the high of COVID and the COVID era money.
Yeah.
Well, it'd be interesting to see what happens with interest rates here, the balance of the year and how that plays out for buyers here this year, and then certainly into the spring, as you said.
Yeah.
You ready for the final 3 questions?
I am.
All right. If you had one piece of advice for your 20-year-old self, what would it be?
I think I would just tell myself to think more long term and kind of really think about what you want your kind of ideal life to look like. It's kind of like what we talked about before with, enjoying what you're doing. You never want to retire. And I think like just really finding like what my passion is something I would have told myself to do rather than focusing on like your immediate needs, like looking out, into the future. Really.
2 books that changed your life.
So Rich Dad Poor Dad was a big one that I read. And then Richest Man in Babylon was a good one also.
Great book.
Yeah.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know every month to know how your business is running?
Oh, that's a great question. 3 pieces of data about my business that I have to know every month. Yeah, I mean, really, most of it probably is going to come down to my pipeline. It's like, well, what houses do we have under contract that we're buying? What houses do we have in inventory? And then, what houses are pending sale? Yeah.
It's
kind of a simple business.
Yeah, I know. That's where I was going. It's not that complex. Yeah, right.
Yeah.
Greg, I've enjoyed this conversation. I asked lots of questions. What's one question I did not ask that I should have asked?
One question, I think. Yeah, I mean, something I always ask people is kind of like, what's the biggest struggle that you're going through in your business right now?
Yeah, let's do it. Let's uncover it. Let's unpack it.
Yeah. So for me, I think, like I mentioned before, it's kind of, transitioning into this, buyer's market. One problem that I've been facing a lot, I don't know if it's a problem, it's just something I gotta address, which is like these on our home sales, it's like these inspections are getting they're turning into something. And like I said, we're kind of spoiled before. It's like you sell a house and it's like, people are waiving inspections and whatever. And it's just not the market anymore, but it's like, man, these people are getting so picky. And it's like, that's another thing. You're talking about adjusting your numbers when you're buying houses. It's like, I should probably factor in a little bit more money on the inspection period. Yeah. Inspections and seller contingencies. Yeah. Because it's like, I mean, that's another, I don't know, like good percentage of your profits that are coming out after, the offer. It's like, well, here's the sale price, but it's like, is that actually the sale price or are you giving a little bit more money back?
It's funny you mention this because this comes up a lot when I'm talking to all sorts of flippers, right? There's a list of stuff that comes back from the buyer's side to go, here's all these things. And you're like, certainly some are reasonable. Everybody, you want to be reasonable. You want to sell a home that's of quality and certainly is safe.
Right.
Some of these things on the list, you're like, wow.
Some of the things are like,
we've switched to improving the house.
Yeah, I know it's not brand new, but it's like, it still works. So do I have to replace it?
Right.
Like, yeah. But it is kind of one of those times too. It's like, I mean, is it really worth putting it back on the market or potentially losing your buyer?
Right.
And like, I mean, sometimes you got to just go with it. And that's kind of a balance. It's like with anything, it's like, is it worth like, taking the risk, putting them back on the market or, it's like, I don't know.
Right.
It's a tough one to balance.
It is a tough one to balance. Greg, for people who want to find you, follow you, connect with you, where can they go? What should they do?
Yeah, so I'm not big on social media or anything, but yeah, I'm on Facebook if you want to find me on there, or LinkedIn, just Greg Rosa. I don't have any specific business page or anything. So yeah, and if you want to look at HomeVestors too, yeah, HomeVestors.com or yeah, they're on social media as well. So yeah.
We'll put some links below in the show notes for everybody to connect with you. Greg, I appreciate you being here. Thank you.
Okay. Yeah, thanks, Neil.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.